Good artists copy. Great artists steal. Ironically, that sentiment has been stolen quite a bit over the years. People ranging from William Faulkner to Igor Stravinsky to T.S. Eliot to most famously Pablo Picasso have been said to have said that. Steve Jobs said that, attributing it to Pablo Picasso. In any case, the concept of stealing and not just copying is relevant to the stock market as well. We don't always have to come up with our own ideas. We can borrow and steal them from other investors, as long as we make sure to understand the idea ourselves. I want to talk about how we would go about this process, why we would do this, why we wouldn't, and what we have to watch out for if we go down this path, and share a couple examples. Let's say you own stock XYZ, and then you look up all the professional investors who own positions in it. You'll find some that then you can look up their portfolio and you can see what other stocks they have. Those stocks might be similar to the one that you own already, and their investing style might be similar to yours. So it can be like a pre-screen of, hey, if I think this way and this person thinks a similar way, they may know better stocks or other stocks for me to consider. So it's a pre-screen for you to find your next idea. As you study famous investors' portfolios and their thinking, you can also flesh out your own style, especially as a beginner. It's sort of like in music, where when you sing karaoke or play a cover, you learn from the original. You can apply that to your investing too. Practice using their words and their approach and understanding how they got to those words so you can understand how you would think through a stock investing idea. Even advanced investors get stuck from time to time. Looking at other people's ideas is a way to get unstuck, get over the writer's block that will happen as an investor. And it's also a way to expand your horizons. Instead of just looking at the biggest companies of the world, for example, you can find, oh, there are related companies but that are smaller, or there are unrelated companies that I never heard of. Also, you maybe have heard of a company, but then when you see it in another investor's portfolio, you realize, oh, I can invest in that. That's a publicly traded company. So it's a way to open that door. A last reason to consider investing in other people's ideas is that there are a lot of successful investors out there. And sometimes they have good ideas that they're willing to share, or that they have to share. And if they've had a successful track record in general or in a specific area, it's worth sitting up, paying attention, and then doing your own research in their ideas if you're looking for a stock in your portfolio. Let's imagine that we're thinking about investing in an idea that Warren Buffett has revealed to be in his portfolio in Berkshire Hathaway. Why wouldn't we consider one of the greatest investors in the world's ideas? What would be wrong about this? The biggest thing is that if you invest in an idea because Warren Buffett has talked about it or has it in his portfolio, and then it goes bad, you can't complain to Warren. It's your responsibility whenever you buy a stock to understand why you're buying it and why you would want to continue holding it. He won't answer the phone if you call to complain him. The responsibility is on you. Related to that point, the money that you make in the stock market is not in the buying. It's in the holding, it's in the adding, it's in the selling at the right time. If you don't understand the idea, you won't know when to do that. If you're solely relying on your source being the one who invested in this idea, you're not going to know when they sell, first of all. So then you'll get the sell signal and you'll be mad that you found out too late. But more importantly, when things go bad, you're not going to know, should I stick in it? Should I buy more? Should I sell? Because you're not going to understand what the bad news is and how it fits into the picture. That's why this is a dangerous approach if you're not doing your own work. Another reason to keep in mind is that when somebody shares a stock idea, they're not doing it out of the benevolence of their own heart. They usually have a reason. And I'm not talking about pump and dumpers or people who are just trying to get you to buy the shares so that they can sell them. But in general, if somebody is sharing an idea publicly, chances are they want the market to consider that idea and for the stock to move in the direction of that idea. They may also want feedback. They may also want to get a track record and establish a track record of success. But you should consider that they do have a motive for sharing, and it's not just that they want to help you and the general public. A last reason, which is related to this, is to consider the source. There's an old anecdote from the book Ball 4, a famous baseball book that I always loved, where the author is in the dugout watching as a player on the other team calls out something to do, throw to second base instead of first base, or first base instead of second, doesn't matter. And his teammate doesn't do it, and the guy is pissed, the player who's out on the field. He's really mad. And the author in the dugout yells, "Goose, he had to consider the source." And Goose, of course, remembers this 2 years later and grumbles at it to the author when they're on the same team. Considering the source is vital to this process. It's not an excuse to turn off your brain, but you should think about, does this person seem to know what they're talking about? Have they done this before? Do they have a track record in this area? Do they have a track record overall? You have to filter that out. Sometimes you can save yourself time by saying, oh, this guy is always wrong on biotech, for example, so I'm not even going to listen. Now, you should always consider an idea on its merits. And again, you can't just blindly follow someone with a good track record. But considering the source will help you sort this out and is an important part of this while continuing to do your own research. The most popular and well-known place to find other people's investing ideas is 13F forums. The biggest investors in the world are required to file a 13F filing every quarter, 45 days after the end of the quarter. So on February 15th or 16th, on May 15th or 16th, August and November, you will see after the stock market closes a bunch of reports and forms from Warren Buffett and Berkshire Hathaway, or from the Carl Icahns of the world, or the David Einhorns, revealing what their stock portfolio looked like as of the end of the previous quarter. This is the easiest way to find out what the biggest investors in the world are doing. The advantage to this is also that they don't actually like sharing this. They consider this their competitive advantage and intelligence. This is their business secrets. So it's not like they're trying to get the word out so that you'll buy a stock. On the flip side, you're only getting this information 45 days late. In those 45 days, any of these investors could have sold the stock, or they could sell the stock by the end of the quarter and you won't know about it until 45 days after the quarter. You're getting this at a lag, so it's important to keep that in mind. Another place where you can get ideas is that hedge fund managers will sometimes publish letters every quarter. Maybe they're sent only to their investors and then they leak, or maybe they publish those letters publicly because they want to attract more investors. In those letters, they'll talk about the market, which is usually not so useful, and they'll talk about some of their stocks, which usually can be more useful. They may even share 3 or 4 paragraphs on why they made a new investment. That can be helpful even if you don't want to consider that stock. You'll get a 3 to 4 paragraph window into how professional investors structure this thinking and work through a stock idea. Once we move beyond the world of strictly professional investors, there are a number of websites and apps where you can find stock ideas. Twitter is one. There's a community called FinTwit, Financial Twitter, where people are often talking about the stocks that they own or are considering or are following. Sometimes they'll share their reasoning directly on Twitter. Sometimes they'll link out to their newsletter, or they'll link out to a website, or they'll link out to a podcast or whatever, but that can be a good platform. Seeking Alpha, my former employer, is another good place to find stock ideas. They publish a ton of ideas. Some of them are even good, and it's worth considering in your approach. I find ideas there every now and again. It does cost $240 a year to have a membership to be able to really read every article, but it's worth considering. Substack is the engine behind the financial newsletter ecosystem these days. That can also be a place to get ideas and to sift around for things. There's a lot of material that is still freely available, so you can sort through and find things that interest you. So again, Substack is a good place to go. Podcasts are also a place. If you start looking around for financial podcasts, you'll find people who are happy to talk about how they think about stocks, happy to share ideas, happy to share their investing approach. So that can be another good resource for these new ideas. One last site I'll mention is Value Investors Club, which is sort of an original gangster site that's still around. It looks like it's been around since the early 2000s. And it is a value investing oriented site. Some of the ideas are quite ornate and advanced, and so maybe not interesting. But if you're looking for a little bit more off the beaten path, it's freely available at a 45-day delay, and I find that to be a useful place to scroll through for ideas. You have to take each of these sites with a grain of salt. Again, as with everything else, you have to do your own work, and you have to throw in the additional burden here that you don't necessarily know who's writing this, what their track record is, whether they're credible or not. So you really have to be on your guard to be thinking through, okay, does this make sense? Do I want to research this? And then you have to do the work to understand the idea, because again, they will not hear your complaints or care about them. Here are 3 examples of how I've used other people's investing ideas in my investing research. Last November, Berkshire Hathaway's 13F form included Louisiana Pacific, a lumber company. LPX is the ticker symbol. I had seen LPX on a couple screens already, so this was sort of a third confirmatory point of maybe you should check out this stock. At the end of the day, I did not invest in it. I decided I didn't like where it was in the cycle. I just wasn't super confident in it. In the meantime, since the news came out, the stock is up a total return of about 9% versus 11% in the S&P 500. It's actually 17%, but that's including the pop that it got from Warren Buffett and Berkshire Hathaway owning shares. Berkshire has increased their position by 21% as of their most recent 13F form. So we'll see how that plays out. Second example, more recently, Charles Schwab. I've mentioned that I own shares in Charles Schwab. I had never really studied the company, but it was the most interesting stock that had dropped off heavily in March when the banking crisis emerged. I knew that Charles Schwab would be fine over the long term, but I didn't know if it would be a good investment or not. And I saw 2 different Substack newsletters, Scuttle Blurb and Overlooked Alpha, the latter written by a friend of mine, who both made the case that Schwab not only would be fine, but would be worth investing in at these prices. My curiosity was piqued, so I did some more research. I decided that this was the proverbial wonderful company at a fair price, if not better. And so I decided to buy some shares. I'll probably buy more shares over the course of the year. And that's an example of where it's not that I didn't know what Charles Schwab was, but their posts gave me a sense of, oh, okay, there's a real opportunity here. My last and best example is from 2017. There was an author on Seeking Alpha who I knew and respected, Ian Bezic, who pitched his best idea for 2017, a Mexican airport company. Whenever I tell people I've made money in Mexican airports, they kind of look at me like I have 2 heads. It's such a weird investing idea to them. And it would have been to me at the time too. I had no idea that they existed. But there are 3 publicly traded airport companies in the US that run Mexican airports. He pitched the one that runs the Pacific airports, and his case made a lot of sense. I did my own research. I found the numbers were a little bit different than how Ian had presented them, maybe because of currency translation or whatever else, but the general point made sense. The price seemed reasonable, and so I bought shares. The idea worked quite well up until the pandemic. Then all travel stocks sold off heavily. But because I understood the idea well enough, I bought more shares of it, as well as of the other company, one of the other airport companies, OMAB, which is the Centro Norte, the central north of Mexico. And the feeling I have is actually I should have bought a lot more. In hindsight, it's always either I was an idiot for buying or I was an idiot for not buying enough. That's life on the stock market. But those 2 airport companies have made me more money combined than all but one other stock that I've owned in my 12 years. So that was a big success story that started from an idea that was from somebody else that I then verified and felt comfortable with. We never know everything in the stock market. It's something we have to be comfortable with. One of those things is that with thousands of stocks out there, it can still be hard to find an interesting idea. And so borrowing and stealing from other people is a worthwhile practice that can help us find new ideas worth investing in and improve our investing analysis abilities. It's important to always do your own work, though. Every buy decision or sell decision is yours and yours alone, and you have to take ownership and responsibility for it. I would rephrase the intro phrase as Bad investors copy and then blame the original investor for their mistakes, while good investors steal and make ideas their own, for better or worse. In my next video, I'll share 2 last ways to find stocks for beginners, so stay tuned for that. Subscribe to this channel, check out shortinvestingguide.com for the full post and more information on how to invest in the stock market. Thank you for watching, and see you next time.